Yo, what's going on, Bexio? Back, and today we will be talking about the stock market again with two stocks in particular, that being Apple and Tesla, because their splits are coming up, and Monday morning on market open, these stocks will be split. So Apple will be split for a 4-to-1, meaning the price will be divided by 4. It'll be roughly $125 a share, and your shares that you hold will be multiplied by 4. So if you have 1 share, you'll now have 4. So for every share you have, you'll have 4 shares. This is nothing new for Apple. Apple's been doing this, ever since they became a publicly traded company. So that's why I think a lot of people might not understand so much about stock splits. It is Apple's recipe to success, keeping their stock price affordable for anyone and everyone who wants to be involved in their company, and they want to keep the price down so that everyone can be involved in their stock market company, their stock on the market. And if you look back at Apple during any time that it's done a split, there's been one time where the returns after the stock splitting actually was a negative return for a short period of time, somewhere within like 3 to 6 months after the split. There's only been one time. They have done, this will be their 5th split, I believe, and it is every single time besides one has been a positive return, and it has been as high as 90% in a short-term gains off of a stock split. So with that being said, should you buy Apple stock when it splits? I am a little bit biased here because I am going to be buying Apple stock when it splits, or adding to my Apple that I already hold. So I'll get my split shares and then I'll buy more, because Apple, in my opinion, is just a great company, something you can't go wrong with. And there's actually 2 charts here that we're going to look at showing you a 10-year period of parking your money in Apple, and why, just everyone loves this company. They just print money and there's nothing you can do about it. So this first chart right here is the growth of $10,000 with the dividends reinvested. So you get paid a dividend with Apple. It's right now it's roughly 0.6%. It's usually around 0.6, 0.8, 1%. It's around there, when normally that's like their range. And this shows what would $10,000, if you put 10 grand in, it shows right here, August 30th, 2010, and what it would be worth August 28th, so that was the Friday, this last Friday for the market close, 2020. So a 10-year period, it would have been starting with 288 shares, and you would have ended with 334 shares. So through the splits and stuff, I think there was one split. I think one split during that time. So you would have had more, obviously, shares from that, and your total return would have been a whopping 1,567%, and that is insane for 10 years. That's ridiculous. That's almost, average annual returns 32.5% a year. That is insane. So you got starting 10,000 and ending with $166,788.36, which is ridiculous. 10 years to 16x your money. That's crazy. We all know that that's crazy, and that's with dividends reinvested. Here's one without dividends, so the same thing, but without putting the money you get paid for holding shares, without reinvesting and taking it out. So it's $149,631.65 for those shares right now. So you can see that's a difference of just under $20,000. So that's a big difference without reinvesting dividends and with reinvesting dividends. So if you use Robinhood, or most brokerages have a DRIP feature, which is dividend reinvestment plan, which means any dividends you get, instead of getting paid to you, they still get paid to you. They just get reinvested in that stock that paid them. So the Apple dividends would be paid in Apple stock, and any other stock that paid dividends would be reinvested into there. So that's a good feature, because obviously you can see the money would be almost $20,000 of losing out without reinvesting the dividends. So those charts show just how crazy Apple can be and how great of a company it is right now. Not to say that it won't turn bad or have some bad decisions or something. That could happen, but Apple just looks way too strong. The tech sector looks insanely strong. As we've seen, they're just carrying the entire market right now. So I just think Apple's a safe place to park money as long as you're willing to leave it in there for, a decade, 10 years. 5 to 10 years, I'd say, is like the minimum you should be willing to put your money into something like Apple, into any stocks realistically, but especially looking at like Apple and growth stocks. So next would be Tesla shares. They're doing a 5-to-1 split, and Tesla's going to be a little bit more tricky to deal with because the company isn't like Apple. It's not just printing money and it's like a money machine. There's a lot of hype around Tesla, a lot of known, like a lot of clout, I guess Tesla's got. Like a lot of people know what Tesla is, and they know that people like Teslas and that people like Elon Musk. And I think as long as he's at the helm and has a controlling interest in Tesla, there should be no problem with that company. But Tesla is more of a gamble, in my opinion, based off of, looking at the charts and stuff, because the market has priced in insane expectations for Tesla. And without Tesla selling their credits last quarter, they actually wouldn't have made money. So that's just looking towards the future. The short-term future for Tesla after splits are, 50-50. It's probably going to continue to go up because of, the value people give Tesla and people seeing the price down and seeing that it went over $2,000. And if it comes down to, I think it's like the 450-ish is where it's going to be after the split. I think there's going to be a rush to get Tesla stock. But short term is like a toss-up. Long term, if they execute and get, their car sales up, they could be selling like 3 million cars a year in the next few years. They could get their solar business up and running and actually start deploying more of this solar around and seeing where that goes. Their batteries, if they start selling their batteries, start selling their technology for their cars, there's a lot of options for Tesla to be making money. So if those go good and they don't rely solely on car sales, because let's be honest, Tesla is not a car company. When you compare it to companies like Ford and GM, it's not one of those companies. It's just not how they operate. They're a tech company. They're a tech company that makes cars. So essentially, that's why we could be okay with a higher PE ratio. But with theirs right now, over 1,000, so it's still going to be ridiculously high. Even after the split, it's still going to be just insane. So it has a lot more risk carrying to it than I would put Apple risk to. But obviously they're both stocks, both investments come with their risks and everything. But I think Tesla has a way higher risk. That being said, I'm still going to be buying Tesla stock when it splits on Monday. So a little bit biased on maybe whether or not you should buy it or not. I think as long as you have a long-term plan and know that what you're getting into with any stock and any investment is the long term, and you can put aside short-term losses, especially in companies like Tesla and Apple. After splits, it might be expected to go up and it goes down, and a lot of fear kicks in and people sell off, and then it might go down further and be undervalued when you buy back, and all that types of stuff. But as long as you know what you want and your plan for the next 5 years for these companies or your investments in general, it all comes down to doing your own research, making sure you know what you want and you stick to your own plan. But you shouldn't just blindly follow anyone ever. So, guys, that's pretty much going to do it for this. Apple and Tesla stock splits are going to be super interesting to see what they do over this next week when they split. So I'm going to be watching it. Obviously, I'm going to be buying into it. So I'm going to be watching it every single day, and just out of curiosity, because I'm not someone who's going to panic and sell over anything. So let me know what you guys are doing. Do you own any of these stocks that you are going to get splits on? And are you going to double down or introduce yourself to these stocks after they split? And as always, guys, don't forget to comment, rate, subscribe. Also, support. Really helps the channel grow. And I'll see you guys in my next video.